Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing great. All right, so we are going to take a look at the economic calendar just to kick things off. And right now, so this is the Forex Factory calendar. Now, if you set up a free little username for this, it's a free site. It'll make sure that the economic data releases are in the time of wherever you are, right? You can set it to wherever you are on the planet. That way you're not getting the releases at some other in some other time zone. So that's a nice feature to Forex Factory. I think a lot of these sites do that now. Today's a pretty quiet day. However, keep in mind that we have FOMC member Barr speaking at 10 a.m. So we no sooner get through the clearing range and boom, we have an FOMC speaking event. In terms of looking ahead to the week, not a whole heck of a lot until we get to Wednesday. And of course, we have CPI, we have inflation data that kicks off even more FOMC chatter. But in terms of the importance of the data, gang, the inflation, if you want to think about the three things, the three macroeconomic pillars, inflation is in play this week. And that's going to be a big one because obviously that's a big reason as to why the messaging and the monetary policy action has continued to be a little bit more on the hawkish side. And we're all collectively anticipating at what point does the Federal Reserve pause. And the pause still does seem to be the most probable after the July 26th hike of a quarter point. And then, of course, they take August off because, they need a vacation from their strenuous monetary policy work. And then they'll be back in September. And for the most part, for the remainder of the year, we're looking at a probability, right, of the pause. And so that means pivot and rate cuts are off the table completely for now, unless something changes, some unforeseen factor that pushes the Federal Reserve to pivot. All right, so that's what we do, gang. Remember, trading is not trying to see the future, trying to front run the Fed, trying to front run anything, right? We can't see the future. I think we're all adults and we know that, yes. However, the trades are found in the adjustments, right? Trades are in that nuance of what did we think was going to happen and what did happen, or discounting what we think is going to happen, right? So it's a nuance, but it's a big deal because a lot of traders still operate as if they need that holy grail that tells them where a market's going to go and it tells them where something's going to be in 6 months. I don't even know what I'm having for dinner tonight, right? I can't sit here and tell you where the markets are going to be in 6 months or 3 months or even in 3 days. So the less we take the predictive mindset away and just say, look, we're playing probabilities, right? We're playing repetitive patterns. We'll be in good shape. Yes, it's very doable. All right. So as always, gang, phone lines are open for your requests. And let's go ahead and jump into our charts. And there we go. And let's open these up. All right. So let's kick it off. If you have any questions, feel free to type them on in. Symbols, time frames. Maybe you have a position right now. Maybe you're looking for targets or a zone of entry. Let me know and we'll jump into it. Just a couple of things to kick off our morning, and that is looking at where we sit right now in terms of the previous session. That's the line of the sand, gang. What was the cash close for the futures contracts, for the ETFs, for the stocks? And you'll see we're trading just below, interestingly enough, the cash close, but we have intraday a bit of strength. And it looks like ever since we bounced into some oversold support 10 minutes after 6 Eastern, we've spent most of the morning, right, trying to climb on up in the NAS. So a little bit of weakness in terms of where we sit relative to Friday, but we can definitely see risk appetite, at least this morning, starting at about 6, maybe even a little bit earlier, is present. And then let's take a quick peek at what's going on with the yields. Yields have started to move into a downtrend, gang. So be careful. However, intraday, 5-minute time frame, bouncing out of the hourly price movement range. So a nice oversold bounce We'll see where that brings us. And then lastly, what's up with the dollar? We take a look at the 6E. Huge move, obviously, Friday. Here we are on Monday in a little bit of a pause. I would not look at today's daily time frame candle and say, oh, this is a terrible morning for the euro, or a very, very bullish morning for the dollar. We had an extreme move on Friday, a little bit of a pause, trading up in the upper quarter, upper third of Friday's range. Hard to call that bearish, but it is not above the line in the sand. Nonetheless, I'm going to continue to be pretty bullish euro, bearish US dollar. All right, so first up, editor asks about Home Depot. Sure. Can we take a look at Home Depot on the daily? You bet. Thank you very much. All right. What we have here in Home Depot on the daily is a test of the 200, a test of price action pretty close to the daily price movement range. And ultimately, what we want to remember, as I take a nice sip of my ketone coffee here, I want to remember is I'd rather be long. The previous trend immediately in front of the current chop was up. We're above the 200 propulsion, those white dots. It's tough to be a bear here. I'm going to have to be patient, but I like the long side. So if I want to be a little bit more conservative, it's going to be closer to 300. If I want to be a little bit more aggressive, it'll be closer to the lows that we saw on Thursday, right around 301.5. So it depends on how conservative you want to be, but I would focus on the long side. Yeah, I would absolutely be bullish. All right, next up, Robert asks, Apple looks to finally be taking a break on the daily. Let's see what we've got. On the daily, what would be the next support to buy at? Oh, thank you for not asking where to short Apple. Robert, love the question. If I'm looking at Apple, a little bit of a pause, I'm going to actually look at Apple. I'm going to look at XLK. I'm going to look at Microsoft. Right. And we are going into earnings season, right? This issue of This Week in the Markets going out today, we talk about the way I look at earnings and really what the window for opportunity is within earnings. And when I look at Apple, remember, are we at least 2 weeks outside of the window? We are. So I'd say about 189 to about 186.80. That's what I'd be focusing on there. So when you take a look at this chart here and you think about what the overall direction is, take a look at the multi-trend, gang. Do you see the green rows of colors below the chart? What you have there is four key exponential moving averages being watched and tracked to give us some idea of the structure. Momentum is bullish, trend is bullish. So this is buy the dip all the way. Yeah, this is absolutely buy the dip all the way. Am I anywhere near a mean reversion to the 34 EMA? I am not, right? So that's where I'll lean on those daily price movement ranges. And those will update every day because volatility does change from Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday. Volatility is different. And so we look at it within the patterns of each day's characteristics. Yes. So that's what I'd be keeping an eye on. Thanks for the question, Robert. All right. Next up, BJ asks about AbbVie. AbbVie's in a downtrend. BJ, healthcare has continued to struggle. We are seeing some inflows despite the weakness. So that's at least a start for maybe some interest to the long side in healthcare. But from a structural perspective, healthcare is in chop, although it's nearing some daily price movement range support, which has been good in the past. But UNH continues to be the bigger problem. This is where high concentration weighting, gang, is so important. And this is why, despite the fact that this phrase is nauseatingly repeated, market breadth does not matter. I know you might be saying, oh my gosh, Rog, what do you mean market breadth doesn't matter? Think about the way in which different stocks are weighted within sectors and the sectors are weighted within the indices. They are all the important ones, high concentration weighted, which means a very small number of stocks and sectors have a disproportionately large effect on the broader averages. UNH is a perfect example of, until this thing, UNH, can start moving higher, it will be very difficult for XLV to start moving higher because UNH is the number one weighted stock in XLV, followed by J&J. If J&J is moving lower, UNH is moving lower, it is darn near impossible for XLV to stage a prolonged rally, right? So that's where AbbVie is going to struggle in light of that, and it is in a downtrend. So if I'm looking for AbbVie, it's going to be a short, right? We always want to think about direction. Directionally, that's where we start all of our analysis. And directionally, AbbVie is in a very choppy, if not bearish, corner of the market. All right, VLO. Let's see, an August 18, 110 call. 110 call. Keegan, as far as the timing on that, we are looking at a choppy market in VLO. So I guess my first question is, of all the things that I could look at, for example, in the XLP, Rob, what are you talking about? XLE. Get the alpha. I'm trying to get the alphabet soup straight here. Of everything in XLE, of everything in XOP, is this the absolute best trend I can find? I probably would marginally prefer WMB, Schlumberger, maybe EOG, maybe Phillips 60 PSX. Let's try to find something above the 200, right? If I'm going to be looking at calls, let's try to do that. However, specific to your question, I'd be willing to buy a call, maybe not the 110s, right? But I'd be willing to buy a call if we trade down to the lows we saw back on June 22, right? June 22 lows were 108.28. And then my goal is to always give myself no less than 21 days to expiration and an at or slightly in the money option. So I do like the long side, Keegan. I just got to see it move down a little bit more. I would use the Darvis support, the most recent, at around 108 and change. All right. Thanks for the question. All right, Google. Hey there, Mark. All right, Goog. Let's go take a look. Goog pulled back on the daily. When I'm looking at Goog, I'm going to immediately think, of course, from a big picture standpoint of weighting the NASDAQ, but then I'll fine tune it into the communication sector, because here is where Google and Meta pretty much dominate. I like almost everything else but Google and Disney and probably telecommunication in XLC. Do you see this, Mark? So if I'm looking for a pullback buy, and I love that you're looking for a pullback buy, that's fantastic. If I'm looking for a pullback buy, Meta, Netflix, Comcast, Activision, Charter, right? Not Disney, not Verizon. Anything in the IYZ, I'm leaving alone. There's quite a bit of telecommunication, IYZ names in the XLC, and they're a mess. But when I'm looking at relative performance, Google is right now not a relative performer, right? Netflix is, Meta is, Comcast is. And that's where I'd say the edge in trading doesn't come from having a favorite symbol or a secret squiggle that you love. It comes from the watch list building process. And that's, for me, the number one goal. What are relative performance to the up and down side? If you would ask me, Mark, hey, I want to short something, and I tell you, keep an eye on Disney, right? I tell you, absolutely, without hesitation, keep an eye on Disney. That's an easy one. So if I can find the best example of a strength or weakness play, and then make sure I'm prioritizing them in terms of what they're most likely to do based on their current structure, that's where Google would fall short for me. Can you buy a pullback? I would wait for the daily price movement range, but I think that there are other names that would be better, right? That have a higher probability of falling through, if that makes sense. Yes. So sometimes the question isn't, can I trade Google? I always ask myself, Mark, the question is, why do I want to trade Google? Why do I want to trade, a particular name? All right. Okay. So next up is IBM on the daily. Testing the 200. I keep an eye on that one, Mark. That's a pretty good look. 200, if not the 200, take a look at the daily chart, the Darvis there, 129.20, that area. So I would say anywhere between the 132 handle and 129.20 would be a viable, roughly 3 points of zone for IBM. And if you want to be a little bit more specific, wait for the slow stochastic to reach the oversold level. That would be the 20 level on the slow stochastic, 21K 3D setting. I'd keep an eye on that in terms of if you want a little bit more fine-tuned level within that 3-point zone. I would definitely keep an eye on that. All right. Next up, Rainy Days asks, can I please take a look at ENVX? It has high institutional ownership, and I'm not sure to read that fact. So Rainy Days, what I would say is if you've got something that has interest, right? The next step would be, does it have, here, let's do it here. Is there volume, right? And I know this looks like a very busy chart. I've just got all sorts of things running right now on this thing. So ENVX. Okay. So what I want to look at here is volume. High institutional ownership, likely that's sitting at about $14. Do you see that, Rainy Days? Look at the volume ledge there. Look at the point of control. So high institutional ownership is probably about 5 points below where we are right now. This is in an uptrend, so we need a pullback. But if you want to read the institutional ownership, track the volume, right? When people talk about following the money and then they don't talk about volume, now they're just using a soundbite. And I see a lot of that, right? I'm following the money. This is where the big money's at. Volume, gang. It's always going to be where the volume is at. So think of it that way, Rainy Days. And the closer you can be with everyone else down in that area, great, right? And then I would say even aggressively, I would look at the last major move. And I would say that from a last major move perspective, I'd want at least about $16.30 as far as a 50% pullback, right? Nice little Pingala move right there. Yeah, I would look for about a 50%. Okay. All right. Next up is Tom says, a good morning for coffee. Always coffee and charts. I need to make some more coffee though. That is it for my first espresso of the morning. All right. But yeah, this is an interesting, you ask an interesting question, because what I love about your question, Rainy Days, is that what we want to remember is volume, right? Whether it's institutional ownership, whether it's a point of control, whether it's a volume ledge, whether it's a VWAP, if we can track that price-based volume, we've got an edge on most traders that A, don't track price-based volume, or B, think that following the money is something other than volume. So great question. All right. So let's see here. I think I got all the questions. Oh, look at that. I think we got all the questions here this morning. All right, gang. So as always, thank you so much for being a part of Charts and Coffee. On Sundays at 6, we do a show at 6 p.m. in the evening to prepare for the week. You can check out the replay for that over at simplertrading.com's YouTube channel. And then I've got my YouTube channel as well. You can catch over at Raghee Horner, right? And we broadcast Charts and Coffee as well as the Sunday show as well. So if you're looking for other content from me, check out Raghee Horner at YouTube. All right, gang, have a great one. I'll see you tomorrow. Same time, same station. My Sector Secrets Mastery folks, I've got our notes queued up. We'll jump into the opening session, day trade in the morning. We'll move on to some swings shortly after that. All right, gang, be good to each other. I'll talk with you soon.